In December of 2021, CNBC reported that apartments were actually booming in the United States. Apartment occupancy and applications were actually going up all across the country, which is a little bit strange after the housing market boom that we've seen over the last 2 years. So not only that, but apartment rents are also starting to go up all throughout the United States. That means rents and the cost of rent is rising too. In fact, this apartment boom and occupancy was so high in November of 2021 that it's actually outpacing the for sale home market in the United States. So today I kind of want to talk a little bit about why apartments are starting to boom all throughout the country and what this is going to mean for the housing market in 2022. But before I break all of this down, my name is Nate from Minority Mindset News, and if you like this video, then smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. Let me start by giving you a few statistics from CNBC. CNBC reports that apartment occupancy hit a new record high of 97.5% in November. This is all according to RealPage, the researcher that they're pulling these statistics from. And the annual increase for new asking rents is around 13.9% higher than it was in 2020. Now, demand for apartments and apartments in general has gone up over the last 10 years or so, but right now it is nearly 2% higher than what we're used to seeing. So what exactly is going on here? Well, there is a few different reasons why the renting market is booming right now. One of those reasons is because wages throughout the United States are beginning to rise. Wages rising are a response to inflation also rising. The CPI for October 2021 showed that inflation and the prices throughout the United States had gone up by around 6.2%. That means that all of the industries that we have throughout our country, the average price of things was rising by 6.2%. Normally, inflation is at around 2 to 3%, so that's double what we're used to seeing. In response to that, wages need to go up so that workers have enough money to meet their standard of living, whatever the standard of living is in that area. Now, depending on how fast and how high wages increase, that could have a direct impact on how much rent is going to be in a particular area, and sometimes that can lag behind what wages are. In a lot of cases, though, we can see housing costs actually outpace what wages are in the United States. So with employment starting to go up, the unemployment rate was only around 4.6% at the beginning of December 2021. You will see a lot more people that have jobs and, more importantly, better paying jobs. And initially, this can be a good thing for the market, but like I said at the beginning of this video, renting prices have also increased by around 13.9%. So as wages go up, that means people can go out and spend more money. They have a lot more money from their jobs. So naturally, they're gonna wanna go out and spend that money. However, as they do this, these businesses and companies that produce products, goods, and services are going to have less because there's such a high demand and they have to catch up with their supply. So businesses will naturally have to produce more products. Now that comes at a cost, and that cost is going to be trickled down to the consumer. Ultimately, that affects every single person in our economy. So the people that own these rental properties, rental units, will eventually have to raise their prices because their standard of living would be lower otherwise. The other thing that is driving demand for apartments right now is because home prices are at record highs. In December of 2021, home prices were costing an average of 20% more when compared to the same time in 2020. And these are homes that typically have no additional value. They are the exact same home, just in a different year, and they're worth 20% more. That is a massive spike. We don't typically see that year over year, but because of the boom in housing in 2020 and in 2021, houses are costing more. And houses in general were already pretty expensive for the average American. So we have millions of people now turning to apartments. I mean, a house is more than just a mortgage payment. You also have insurance that comes with a house that you have to pay for. There's also taxes like property taxes that come with owning a home. And just to buy the home, a lot of places are pushing you to have as much money as possible down in order to make the deal. This way, it's a lot safer for banks and other financial institutions when you get that loan. And finally, there are other costs associated with owning a home. Just buying a home requires a closing cost. This is the actual money that is going to go to the realtors and any money that needs to be put into an escrow account. These can sometimes be tens of thousands of dollars, and sometimes people just don't have the upfront capital in order to buy a home. Not to mention all of the maintenance that a home costs. So if something breaks in your home, you as the homeowner need to fix it. However, if you live in an apartment, a lot of these costs are pretty much gone. The only thing you have to worry about in an apartment is your rent. Occasionally you will have some other insurance, but that's typically very inexpensive. You may be in charge of some of the utilities, but again, this is all going to cost you way less than it would if you were going to own a home. And in 2020, the Federal Reserve made it a lot easier for millions of Americans to get a home. That's why we saw a boom over the last 2 years. When the pandemic was first starting back in March of 2020, the Federal Reserve decided to step in and provide a ton of additional economic stimulus. The reason they wanted to bring in so much stimulus is because they thought the United States economy was going to crumble because no one was working because of social distancing and economic lockdowns. If nobody has a job, then that means nobody's getting paid. And if nobody is getting paid, then nobody can buy products at a store. This means that people and businesses are ultimately going to shrink, at least financially. So the Federal Reserve printed around $3 to $5 trillion in stimulus. This was stimulus in the form of a direct check to Americans, sometimes multiple checks depending on the circumstances, which equaled thousands of additional dollars for anyone to use however they wanted. In addition, we had the Paycheck Protection Program. Now, this was more for businesses, and it basically said that if businesses did not fire employees, the federal government would give them money. That was in an effort to make sure that people were still employed throughout the pandemic. And finally, if people were fired, then they were given additional stimulus from the federal government with extended unemployment benefits. So you had all of this money circulating throughout the economy, and a lot of people saved this money for a down payment on a house or just a booster payment for their mortgage. This means that if you were in a good financial situation, like you had good credit and you had a decent amount of savings and a good job, you could take this extra thousands of dollars and apply that to your mortgage or your down payment. Think of it like a built-in starter kit for buying a home. That helped millions of people get a home, but the Federal Reserve took their measures one step further and dropped their benchmark interest rates to around 0%. This gave a lot more people way more access to money, and loans in particular. Now people could go out and get a mortgage and have a way lower interest rate than they would have just a year earlier. And with interest rates so low, this means that payments are going to be lowered on a mortgage overall. This meant that millions of people could now afford a mortgage, sometimes even a bigger house and a better house than what they were expecting before. And on the flip side, people were selling their houses because of this. Demand started to pick up because millions of Americans were realizing this is my chance to get into a home. I can finally afford a mortgage. And if I can get a 30-year fixed mortgage, that means I will make that same exact payment on my mortgage every single month for the next 30 years. People were taking advantage of this mortgage situation. And we saw demand go way up, but America only has so many houses. And America only has so many houses for sale. So some people were convinced by the current market to sell their homes. And they would get sometimes tens of thousands of dollars extra for their home above asking price. And that continued for about 2 years. However, by the end of 2021, housing prices are now extremely high. That means that a lot of people, even though mortgage interest rates are still low and they have the stimulus money, still can't afford a house. they are completely priced out of the market. And that has its own implications for the housing market, which we'll get into in a few minutes. But for apartments, people are choosing those now over homes. They're just the more affordable option. So that is technically the financial side of why a lot of people are moving out of their homes and why a lot of people are moving into apartments. But there's also the cultural side that we need to address here. When people sold their homes in 2020, they figured that they could get a ton of extra money for that. But the reality is, people still need to live somewhere. So they have two options. They can, one, take all of that additional money and move into a brand new house, or two, they can downsize. They can move into an apartment and have thousands of extra dollars in savings, or they can invest that money. In 2021, we've seen thousands, if not millions, of people do exactly this. People, instead of moving into new homes and dealing with everything that comes with a home, are now moving into apartments. This can be older people or just people who are looking for that luxury experience. Now, I'm not just talking about basic apartments here. I'm talking about your luxury apartments that offer you thousands of square feet and an entire community at your fingertips. They are able to do that because they have tens of thousands of extra dollars from their home sale, when typically they would have stayed in their house because that was the better thing to do. Now in 2021, these people are moving out of their homes and going into an apartment. That is eating up the available supply that we have on the market. But on the flip side, people are taking the stimulus money that was printed in 2020 and in 2021 and now applying it to an apartment. Just because you can't afford a house doesn't mean you can't afford housing in general. So people are taking that thousands of dollars and finally moving out of their parents' house, away from another roommate, and by themselves. Another thing too is that our nation, and the world for that matter, has moved towards working from home. So if people need a space to work from home that is just them, or maybe one roommate instead of 2 or 3, then they're going to take that option. And if they have the money to do so, then that is even better. People need the space now in order to work from home. And I think our nation in general is starting to separate from one another, at least temporarily. One of the best ways to do that is an apartment. It's a lot harder to do this with a house because a house is a multi-year commitment. However, if you're in an apartment, you can get a lease for a few months or even just a year. That means if this whole pandemic blows over by the end of 2022, you can go back to living with several roommates, and maybe you're not working from home anymore. Maybe you're back in the office and you don't need to have a workspace. You can adjust your living situation accordingly at a rapid pace. That is one of the benefits to living in an apartment. There is massive flexibility. If you want to decide that you're done with your apartment, you can do that in a relatively short period of time. A house, however, is very tough. If you want to get out of your house, you first have to sell it, which means you have to list it and you have to find a real estate agent. Even if you don't have a real estate agent, things are going to be tough. You have to find someone who is willing to buy your house. Right now, demand is super high, but that doesn't mean your house is going to get sold quickly. When you are in an apartment, you don't have to worry about the selling part. You don't really care if your landlord finds a new tenant right after you or within 6 months. All you care about is the flexibility that you get to leave whenever you want. So renting and apartment occupancy is booming throughout the United States. But why exactly are housing numbers starting to go down? Well, like I said before, one of the big reasons is because people are starting to get priced out of the market. As prices continue to rise, the market just isn't going to be able to afford those prices. Now, this poses a threat to the housing industry because if prices continue to get out of control and nobody is willing to buy a house at a particular price, well, that is going to send the value of homes down. Remember, a home's value is only what someone is willing to pay for it. If you set your home price at $300,000, but nobody is willing to buy that house at that price, you need to come down in price. And if you ultimately sell it at $250,000, That is what it's valued at. That ultimately means that housing prices cannot continue to go up forever unless wages and salaries continue to rise too to meet that inflated home price. You're eventually going to see homes start to go down. The other big reason why the home market is starting to shrink is because of the Federal Reserve. That's right, they started it, and now it looks like they're getting close to ending it. At the beginning of the pandemic in March of 2020, there was so much economic stimulus, so many reasons for people to go out and spend money. However, by the end of 2021, a lot of that has disappeared. This means no more additional unemployment assistance, no more stimulus checks, and no more mortgage forbearance or moratorium programs. That was the other thing the federal government did during the pandemic. If you couldn't afford your rent or your mortgage, you could essentially put off those payments. You didn't have to pay them. That is starting to end too, which means millions of people who put off their payments can no longer afford the home that they live in. And now it's sending millions of people into foreclosure. I made a complete video breakdown on this just a little while ago, so if you want to check out that video, I'll leave a link to it in the description below. The bottom line here is that it's sending millions of people into foreclosure because they can't afford their mortgages. Now, that poses a unique complication to the housing market because foreclosing on a house takes very long. So it's possible that millions of people could come up with the payments for their mortgage over the next few months. But it also means that millions of people are going to be faced with foreclosure or just selling their home. Now, the problem is, though, people have to go somewhere. If you're selling your house, you either have to go into a new house or an apartment or live with someone else. Because a lot of these people are faced with this decision, many of them are deciding to sell their house and they're moving into an apartment. This is because housing prices are so high right now. They would essentially be downgrading even though their house sold for a lot. So they save some money and move into a luxury apartment instead. In addition, the Federal Reserve has talked about raising its benchmark interest rates in 2022 at least one time. Now, depending on how far inflation goes up in the next Consumer Price Index report, or CPI report, this will dictate how the Federal Reserve raises interest rates in 2022. Right now, it could just be one time. However, it could be multiple times if inflation is out of control. This is all just a way for them to stop people from spending so much money, which means there is less money circulating throughout our economy. When and if that happens, that means interest rates are going to go up and people are naturally not going to be able to afford the same mortgage that they could back in 2021 or 2020. This means that you're going to have a large group of people that can't get a mortgage and the housing market is going to drop. In addition, if people can't get mortgages, they still have to live somewhere and apartments are going to go up too. But the problem with the housing market kind of crashing or booming means that the apartment market is going to start booming too. And if there is a very low supply of apartments but a huge demand for them, that means rent is going to be expensive. And it just means that people are going to have a much harder time finding a place to live. And if they can't find anywhere, they're faced with a grim reality. They'll have to move in with someone or they're facing homelessness. In 2021, homelessness actually rose for the 4th straight year. It rose by an average of 2.2%. This means that people are losing their homes. They're facing evictions from their apartment or their house. Even though the United States government has provided so many different ways and so many avenues for people to keep their housing throughout the pandemic, there still is millions of people who are now losing their home. And there is a lot of reasons for this too, but I think that people underestimate the amount. And there is a lot of reasons for this too. I mean, a mortgage is more than just a mortgage payment. You also have taxes and you have insurance. So while your mortgage, if you have a fixed rate, will stay the same for your entire loan period, your taxes and insurance are going to go up. If that gets out of hand, some people are not going to be able to make those payments in general. In addition, with apartment occupancy starting to rise, that means rents are going up too, and some people just simply cannot afford the rents in their area. That leaves them, like I said, with only a few choices. So what exactly does this all mean for the housing market in 2022? Well, honestly, we don't really know yet because we don't know what the Federal Reserve is going to do with interest rates and stimulus. Any announcement that they have is all going to be curbing inflation. And honestly, we don't know how bad inflation is just yet. The Federal Reserve is worried about our supply chain issues, which are pushing inflation higher, and the Omicron virus. New studies are showing that the Omicron variant is not as strong as it may appear to be. However, these are very early studies, and we don't have a full comprehensive look at the variant just yet. However, if Omicron gets out of control, that means the United States and the Federal Reserve is going to be in a very similar situation to where it was in March of 2020. The United States is going to have to be put on lockdown, and even though Joe Biden has already come out and said that America is not facing massive lockdowns at this point, it is not completely off of the table. That could mean more money printing and more people out of jobs, which means more stimulus and supply chain issues. So they'll kind of be faced with either raising inflation even more or letting our economy completely fail. And like they have done in every instance in the past, they're most likely going to raise inflation before they let our economy fail. If our economy fails, that does not look good on the Federal Reserve or the President of the United States, even if it is the right thing to do. I mean, a lot of people could argue that back in March of 2020, the Federal Reserve should have not printed any money for the people. The people should have had thousands of dollars in emergency savings in order to protect themselves. However, the fact of the matter is that they didn't, and the Federal Reserve was not willing to let our economy and our country fail. And for the president, that is just a bad political look on him. If he lets the economy fail, that means American finances are failing too, and ultimately, no one is going to re-elect a president that let the economy fail when you have millions of people struggling to get any sort of money. So it's really going to depend. On the flip side though, housing prices cannot continue to rise forever. Nothing goes up forever, and eventually things have to go back down. There are always booms and busts in markets. However, if the Federal Reserve decides to raise its benchmark interest rates even more in 2022, then you'll probably see more drop-offs from mortgage applications, and you'll see people spending a lot less for homes. That could bring the price down for a home and let some people enter the market again if they have relatively good finances, which in turn could help cool off a lot of the apartment and housing issues in America, at least temporarily. Apartments have always been steadily building because the amount of wages and salaries that people make hasn't consistently kept up with housing prices in America. So apartments could continue to rise as demand for homes ultimately starts to drop. People have to live somewhere, and they're going to choose either a house or apartment or living with someone else. And during a pandemic, living with someone else can get a bit difficult. So obviously there is a lot of different factors at play here, but our housing market is in kind of a weird place right now. Nobody really knows where the housing market is going to go next. However, with apartments starting to rise, something else is eventually going to have to drop. But now I want to hear from you on this issue. What do you think will happen with the housing market in 2022? Are we going to see a lot more people go for apartments over homes, or is the housing market going to crash because of economic factors linked to the Federal Reserve? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.